we've seen a number of banks announce layoffs to their entire banking units and pretty significant amounts. And typically, historically, banks, what they see is headwinds as far as what's coming based on, them internally and their own economists looking at the economy as a whole.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm joined as always by David Warren. We are level 2 mortgage agents. Dave is also the owner at Referral Mortgages, wearing a fresh new lid today. Beautiful, beautiful hat. I love it. Quick shout out to our amazing sponsors, Gerté Poirier Avocat Lawyers, Big Insurance in Westboro, CENTUM, and Easy Neon Signs. EasyNeonSigns.ca. Use the promo code TOREP and get 20% off each and every order. Dave, how are you doing? What's going on? We're 2-2. Let's
go Blue Jays.
2-2, best of 3 series, 2 of them in Toronto. How you feeling?
I actually got a reasonable sleep last night because it was only a 3-hour game instead of a 7-hour game. So the 3 hours of sleep that I got the night before was made yesterday a little rough. But
you got to be a real baseball fan to watch 6.5 hours of a baseball game.
Or you're a solid bandwagoner.
Yeah, but I'll drag behind the bandwagon, no problem. The reason we're actually recording a day late today. Day late, not a dollar short. We wanted to wait for the Bank of Canada's announcement, and sure enough, as expected, dropped a quarter point. So I'll read a quick release here, press release from the Bank of Canada. It says, Bank of Canada today reduced its target for the overnight rate by 25 basis points to 2.25%, with the bank rate at 2.5 and the deposit rate at 2.2. With the effects of U.S. trade actions on economic growth and inflation somewhat clearer, the bank has returned to its usual practice of providing a projection for the global and Canadian economies in this monetary policy report. Because U.S. trade policy remains unpredictable and uncertainty is still higher than normal, this projection is subject to a wider than usual range of risks. While the global economy has been resilient to the historic rise in U.S. tariffs, the impact is becoming more evident. Trade relationships are being reconfigured and ongoing trade tensions are dampening investment in many countries. In the NPR projection, the global economy slows from about 3.25% in 2025 to about 3% in 2026-27. In the United States, economic activity has been strong, supported by the boom in AI investment. At the same time, employment growth has slowed and tariffs have started to push up consumer prices. Growth in the euro area is decelerating due to weaker exports and slower domestic demand. In China, lower exports to the United States have been offset by higher exports to other countries, but business investment has weakened. Global financial conditions have eased further since July, and oil prices have been fairly stable. The Canadian dollar has depreciated slightly against the U.S. dollar. The bank projects GDP will grow by 1.2% in 2025, 1.1% in 2026, and 1.6% in 2027. On a quarterly basis, growth strengthens in 2026 after a weak second half of this year. Excess capacity in the economy is expected to persist and be taken up gradually. CPI inflation was 2.4 in September, slightly higher than the bank has anticipated. We talked about that last week. Inflation excluding taxes was 2.9%. The bank's preferred measures of core inflation has been sticky around 3%, expanding the range of indicators to include alternative measures of core inflation, and the distribution of price changes among CPI components suggests underlying inflation remains around 2.5%. The bank expects inflationary pressures to ease in the months ahead and CPI inflation to remain near 2% over the projection horizon. What do you think, Dave? How do you feel?
We expected it. The market expected it. Leading into this was like an 84% odds of it. And the U.S. Feds are also announcing today, I believe it's probably being announced right now. I don't know the exact time in the U.S., but it's expected they're going to drop as well. It was like over 90% expectation of them. For those of you that have lines of credit, business lines of credits, student loans, or variable mortgage rates, this means that bank prime is now down to 4.45. So when we talk about the overnight rate, that's what the Bank of Canada lends money out at to the banks. So it reduced bank prime from 4.7 to 4.45. So people will see that adjustment, and it typically works out to being like it's just shy of $15 for every $100,000 of your mortgage for every quarter point. So those of you with a variable mortgage, this is obviously great news. You'll see that come down. For those of you that have an upcoming renewal or purchase and have chosen variable, you'll obviously that rate will be adjusted prior to that closing or even after closing, if you've already closed that. You'll see it if you have that adjustable rate variable as opposed to static. Again, this was expected. I think it is imperative that they dropped the overnight lending rate. Just with where the economy's at, where the stickiness in the conversations with our largest trading partner, and no deal having been made yet, and obviously tariff talks on hold again, or officially I guess on hold. I think it is like the growth in our economy has been pretty stagnated. We talked about it last week of kind of that per capita recession that chief economists are have put out there. So I think this will hopefully, again, these reductions will hopefully kind of help businesses, help individuals, help spur, or at least keep the economy afloat as opposed to being completely underwater.
Yeah, it seems as though Canada's on a bit of an island, at least with the US. Like we're seeing, President Trump, just talking about the tariffs. President Trump kind of, I think he's in Korea right now. He's speaking with China today. So he's kind of going a different route. Whereas I know Prime Minister Carney traveled to Asia. So he's kind of also looking at like export diversification, I think, within Canada. So it's crazy how Canada and US are still seemingly miles apart from coming to any sort of agreement. And I know this week there was a whole thing about Ontario used an ad that was kind of an edited Reagan speech to criticize the tariffs. And in turn, President Trump announced he's terminating all trade talks with Canada, basically citing the ad as a triggering factor and threatened an additional 10% tariffs on Canadian goods. So it's wild to me how we're literally neighbors, we're basically siblings with the US, and we're still at this massive, there's still a dispute, basically. There's no resolution, at least in the short term, that seems plausible. They're both kind of heels in the ground right now.
There was I was listening to some commentary on that this morning about the ad and kind of where the trade negotiations have been. One thing the pundits were kind of pointing to was that all of Donald Trump's books on negotiating contracts or in negotiations are, if the negotiations aren't going the way that he likes, and he says it in all of his books from decades ago, find a reason to blow up the conversation and direct it away from like making up a reason on why you're blowing it up. But really it's because it's not going the way that he likes. And it kind of the ad was almost like seemingly almost that reasoning as well of like blowing it up. But obviously they're at an impasse, regardless of the reason for it being blown up, whether like the ad was an excuse or it was not. The fact that they're still not, that we're still in this situation of no, like you said, siblings not having an agreement on the table is just furthering this situation in Canada with regards to, our economy being stalled, all the different industries of steel and wood and lumber and everything else being stalled, and this leading again to these further reductions by the Bank of Canada, and it's seemingly like that there's not any sort of correction or any sort of timeline of when something might come to fruition. I mean, even a week ago or 2 weeks ago in Canada, it was kind of put out that we would have an agreement by the end of October, which, that's obviously gone away, and it's nowhere to be seen. So who knows? And so this will obviously play into further Bank of Canada rate decisions and our overall economy as a whole. So, the good thing for those with variable rate mortgages, those with lines of credit, student loans, and business lines of credit, is you're seeing your payments go down. As we're recording this, we talk about the fixed and variable not always going in unison. The bond market is up 5 basis points right now on the news of the rate drop. So it's, again, it kind of plays to that of, when we talk about them not always moving in the same direction, that's been the case right now.
Yeah, something else that have found very interesting. I know that Bank of Canada kind of alluded to like boom in AI investment. Looking in the US right now, like there is some wild numbers that are coming out with regards to earnings. Like every company, not even just tech companies, but like Caterpillar, for example, they released earnings this morning. They had a beat on both like top and bottom. Like a lot of companies are having record earnings. The S&P is at an all-time high. Like companies, at least American-based companies that are, that people are investing in are exploding. But yesterday, for example, just in the S&P, it finished green, meaning that it was up from where it started the day, but only I think it was 80 of the 500 companies actually had positive days. So like 420 of the companies had losses on the day, but the actual index itself was still up, just showing like how condensed and how concentrated the investment, the AI, the tech investments are right now. And also yesterday, Amazon announced, I think it was 15 or 16,000 jobs that they cut. There's a bunch of huge job cuts that are coming. So all this plays into like these rate cuts and what is happening, because the economy itself is in a massive, it's in flux right now, but very aggressively, and it's just, I'm interested to see in a year, 2 years, 3 years, with this advent of all this AI tech, with these companies making all of these job cuts, like where does that put Canada's economy? And that's why obviously these trade talks are so important right now, because the international economy is shifting rapidly with all of this AI tech. And what does that mean for everyone? Everyone's going to be impacted by this. Everyone's job is going to be impacted by this in some way. You might not be replaced, but someone using AI in that profession is likely going to replace you, right, in some capacity. So I'm just saying, I'm following it very closely, and I'm very interested to see like how this impacts future decisions, how this impacts jobs in Canada, how this impacts investment opportunities in Canada. And obviously, Prime Minister Carney and President Trump are hyper aware of this, and this is why they're traveling internationally constantly to create these trade agreements so that they can bolster their own economy during this massive transition.
I think to your point about job layoffs and things like that, this past couple of weeks, we've seen a number of banks announce layoffs to their entire banking units, and pretty significant amounts. And typically, historically, banks, which are profitable, when you look at their last quarter earnings, they all had a very significant profit. But what they see is headwinds as far as what's coming, based on them internally and their own economists looking at the economy as a whole and looking at a shrinking Canada. Equitable Bank, they cut 8% of their workforce last week. TD Bank has announced 2% that they're gonna cut. Scotiabank announced that they're going to be cutting a significant portion. But when you've got a number of major Canadian banks and the top 6 banks, so Equitable Bank being number 7, actually, 7th largest, but when you have major banks cutting their job forces significantly, like 8% of Equitable Bank is a massive number.
Yeah, that's crazy.
2% of TD's banking unit being eliminated. That's in the last 2 weeks. Scotia, again, I'm trying to look up the exact percentage, but all that to say is like they're seeing what's coming and they're making that adjustment now, knowing what is coming in their own, obviously, with the advent of like tech and things like that, obviously change that landscape, but where they know losses are going to be, they are making those cuts, and they typically make cuts well ahead of other companies, because they are obviously seeing the flow of income and revenue, and they see, like, even just internally, like the big banks, they obviously have a very grassroots understanding of what's going on in the economy, from like flow of cash rolling through their bank or their investments, or money leaving the company from their wealth management businesses, things like that. So they are able to see it well ahead of time, before it even ripples out from that information. So I think that's to me, whenever that's like historically, whenever we've seen the banks cutting employment, that's a real early indicator of what we can expect in the economy.
Yeah, it'll trickle down for sure. And it's a very good point.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you trying to grow your mortgage business? CENTUM has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with CENTUM. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. This episode is brought to you by Easy Neon Signs. Visit easyneonsigns.ca and use the promo code TOREP, TOREP, to get 20% off each and every order. easyneonsigns.ca, Canada's finest custom neon sign maker.
Something that I was reading this morning, Dave, very interesting. We have the federal budget obviously coming out shortly, which I think will also have a massive impact on, we've been saying this, and I was at the Ottawa Real Estate Board trade show last week, speaking to a lot of realtors about the rate cut today and what was expected. And the kind of sentiment was that a lot of buyers are waiting to see what happens with this announcement, but also what's happening with this new federal budget that's coming out. I think it's November 4th, if I'm not mistaken.
Yeah.
Are there going to be job cuts in there? What's going to happen? Ottawa is obviously a very high density government employed city, but I think it's 40% or 35-40% of Ottawa residents work for the government in some capacity, whether it's provincial, federal, et cetera. So what is going to be included in this budget that could impact the workforce as well? So not only the tech side of things, government is obviously not, in my opinion, not exactly on the cutting edge of tech as far as like what they're utilizing to cut costs and so on, but they will. There's going to be it's going to be a ripple. It's definitely takes them a lot longer, and banks too. I mean, having worked at a bank, I can tell you that the financial tech stuff takes way longer to implement for the big banks. You look at like the Wealthsimples and the Robinhoods in the US, they're much quicker to implement new creative ideas into their platforms versus the bank, which takes a long time. So for the federal government, knowing that this could happen, let's say in 5 years, I'm assuming they're factoring these sorts of tools into their budget as far as what jobs they're able to cut, what sort of overhead they actually need to facilitate these changes. So it'd be very interesting to see. But all this to say, I think the market itself is in a bit of a wait and see period right now until that budget comes out to see how their family, their household, their, let's say, sector of the government is going to be impacted by these changes.
There's also further to that is when we talk about the federal budget coming out on the 4th, it's projected to be obviously the largest budget from a dollar amount standpoint at $100 billion from a deficit perspective. And our current government does not have the votes supposedly to even pass it. So if the government can't get the votes in the House of Commons to pass the budget, it triggers an election. So I think a lot of banks and everyone is kind of also looking at whether we might even have an election. And I have heard from people that Canada Elections has already been calling malls and places where they were renting offices from the last election to see if those spaces are still available in the anticipation that Elections Canada that an election's going to happen. They're already signing leases with those with those locations under the assumption that there's a high likelihood of an election possible. So, this could, over the next month and a half, we're going to have obviously backdoor deals and side deals with the different parties, whether that be with the Bloc, whether that be with the Conservatives, whether that be with the NDP, to try and get enough votes to push this through. The figures right now are that there is not, which would then obviously that will prolong and prolong that this budget even being implemented. And then is it going to trigger an election 7 months after we just had one? Which is interesting as well, because, again, we don't have an agreement with the U.S. on tariffs. If the budget can't be passed, things like that, that's obviously putting the economy still in further flux. So all that to say is there's a lot of unknowns and a lot of uncertainty. And to your point about the real estate board kind of saying, and people saying that a lot of home buyers being on the sidelines, I completely agree. It makes a lot of sense. And I think, we've talked about it recently as well, of home buyers being on the side because of a lot of this uncertainty.
So Ontario government, they're doing a couple things to hopefully help first-time buyers. This is something that we've been talking about for a few months now. So Ontario to remove 8% provincial portion of HST for first-time home buyers of new homes. So this is just a quick summary here. Ontario government has unveiled a major affordability measure aimed at easing the entry barrier for first-time homebuyers of new properties. The plan is to rebate the full 8% provincial portion of the harmonized sales tax on newly built homes valued up to $1 million for individuals qualifying as first-time buyers. In homes valued between $1 million and $1.5 million, the benefit will be phased out. Industry groups have welcomed the move as much-needed relief, with savings up to tens of thousands of dollars touted for eligible buyers. However, critics say the measure is still narrow in scope, confined to new builds, so not resale, and excludes many prospective buyers given rising home prices and limited supply in Ontario's market. The context behind the policy: Ontario is wrestling with affordability pressures and a constrained home supply. By removing this tax hurdle, the government hopes to stimulate new home construction, encourage first-time buyers, and support related trades, so builders, developers, etc. But several experts caution that tax relief alone may not shift the needle much if land costs, interest rates, and regulatory delays and a shortage of bots remain unaddressed. So, it could be a massive savings. I think it was upwards of 40 or 50,000 it could be. But I would agree with that last sentiment that, like, the tax relief alone, I don't think it's going to stimulate the market enough for what they're hoping it will do, or at least it is a relief, obviously. But I think most people are looking for, like, cash in hand in the form of, lower interest rates, potentially lower prices. Like, if you're still buying $1 million home and you're saving that 8%, it helps. But I think we were talking about this before too, with getting rid of like red tape or permits and so on. It should hopefully make the homes more affordable themselves, bringing down that actual cost. So I think people would rather see a $1 million home going for 900 versus $1 million home and them getting a $50,000 tax rebate of some form.
Yeah,
That's my opinion.
I think it's still, no matter what, I think it still helps. Not the
Step in the right direction.
Yeah, like GST was cut on new home built on new products, so 5% off it. This is an additional 8%. So, we're talking about Ottawa using the average home price of $763,000 in Ottawa, I think it is. That's $61,000 in savings. So either you're like 763 plus that 61 or reducing it. But either way, that it does, it is hard dollars saved by individuals.
Yeah.
I don't know that it'll have like a ripple effect of people jumping back into like, the market or flooding new construction. But at the end of the day, it is going to help these individuals. I mean, removing HST as a whole is on the average home price in Ottawa alone is 99,000, like 13% of 763,000. So it is a pretty big cost savings as a whole. Again, I don't think it's going to stimulate like rush people back, but I think it is a good thing. And I think the government does need to do something and address these aspects of over the cost to build. Like we said, removing this and then you combine it with lower development fees or, less red tape, builders not having to hold product or properties as long because it doesn't take as long to get through the cycle, I think will help that new construction market. And the government needs to, because like you said, they can't have this new build market stagnant. Like they need it for the trades. They need it for fees. Like they need it for land transfer tax. They need it for property taxes, by adding new product out there. So they have to stimulate that new construction market. There's never been HST on resale, so they don't make anything there. But, really in the new build, like spurning that economy or like that portion of the economy, which generates a lot of our GDP, like is important. The $1 million mark is great for a lot of areas in Ontario, but obviously does not address the golden horseshoe, which is where most people live in Ontario, and that average home price being over $1 million. So I'm sure they'll adjust it. I'm sure it'll get increased at some point, but at least it's a step in the right direction.
Yeah, a great opinion, David. You have great opinions. Great opinion, great hat. The last thing I wanted to talk about was still kind of sticking with the province here. Ford government walks back on plan to consider changes to renters' right to security of tenure. So this is something we talked about probably maybe a year ago now with regards to, we've been talking about obviously rental, the cost of rent increasing, decreasing. I think it's 9 months now, month over month, that it's decreased. But this is with regards to security of tenure. So the Ontario government, led by Premier Doug Ford, announced that it will not proceed with consultations on potential changes to renters' security of tenure. This is the right of tenants to stay in their home after a lease ends unless the landlord has a valid reason to evict. Previously, the government had signaled that it might explore changes to allow easier evictions. So, for example, via month-to-month leases instead of indefinite leases. Under proposed legislation, the decision comes after public and stakeholder backlash, with the housing minister stating that residents expect stability and predictability in Ontario's rental market, and now is the time to consider changes to the system. The retreat is seen as an acknowledgement of both the sensitivity of tenant protection issues and the political risk of altering long-standing residential tenancy rules. I know you're a landlord, David. You work with a lot of investors who are landlords. How do you feel about this?
I have no problem with them leaving those rules in place as they are for tenants. I think exactly as I said, stability of tenants and them knowing that, they can't be evicted for no reason. I think is important. And there are legal ways of moving a tenant, like having a tenant or providing them notice that is valid in the sense of, the property undergoing significant construction, but they're guaranteed that unit back. Somebody moving into the property that they're going to own, like they own it as a mom and pop and they're going to move back in. I think where they need to address the issue and just focus their attention is in the landlord and tenant board and the inefficiency there, and it taking 9 months for people that aren't paying rent or that are like completely destroying and disrupting other people's enjoyment of their properties. That needs to be addressed, and that needs to be sped up of being able to get rid of those bad actors. If somebody's not paying their rent for months on end, it shouldn't take 9 months of them not paying. That's where mom and pop investors are getting absolutely screwed and continues to happen, because they are now having to cover that mortgage and all of the expenses. And then when the property gets, or the property is damaged and abused, that they're now having to fork out not only missed payments by that tenant, but as well the renovations associated to get it back into a habitable condition. But I think they need to just focus their attention on the lack of staff and the lack of efficiency in landlord and tenant board. And that'll just help the entire market as a whole, because, if people can address that segment that is just like not paying, that is taking advantage of that portion of the system, it allows for people that are like good tenants to find good properties and good locations.
Yeah, I agree. I think rent is one of those things where, kind of it's a perfect market in the sense that there's always a need for someone to find a renter. There's always a need for someone to be renting. So the price, like the market kind of dictates the price to that extent. But I would say in this case, when it comes to evicting, I agree. Like if you're moving back into it, or your mother, you own a property and your mother needs to move in, your parents need to move in, like you should have the right to be able to move those people out. But also as a renter yourself, if you're living in a place, you don't want to be getting, an eviction notice today that you have to move out December 1st or something because they want to increase the rent, or they want to
or be concerned every year that there's a possibility, like again, like that mental stability of like having your kids in a district, they're going to school, like, not planning to move, and then now you're being, and I don't know the clauses, and I know I was kind of looking at that consultation, it wasn't anything to be like implemented right away, so I can't speak to the reasons that they were kind of putting on the table for being able to move people out. But to your point, like if you have a family, you're a tenant, you put your kids in school, you don't want to be thinking about every year having to move them schools. That doesn't provide that child stability. Or for your employment, you're close to work where now you're on a great like bus line or LRT line or whatever it may be, and you can get to work efficiently. That shouldn't be a concern every year or month to month to have to worry about that. So yeah, I think just really from a rental standpoint, it's really just in that landlord and tenant board, like improve the efficiencies there, improve that backlog and that BS that both tenants and landlords have to go through, because there are bad actor landlords as well. So the fact it takes 8 months or 9 months for even a tenant to be able to address an issue with them, is crazy as well.
All right, Dave. Well, I think we covered a lot today. Should we slide into some mood boosts? Give
boost me. Boost me.
I got 3 today. Since Halloween is tomorrow, if you're listening this Thursday, I got a few Halloween boosts just to give everyone a little boost. Little boost. Here we go. Number 1. Why did the skeleton cross the road? To get to the body shop.
I like it.
Good. Number 2. Why didn't the witch fly on her broom when she was angry? She was worried she would fly off the handle. Why did the mortician clock out of work early? He was dying to leave. Dying to leave.
I'd say 3 for 3. I'd say 3 for 3. Don't toss a fourth in there.
Okay, I won't. I will keep it at 3 today.
End it on a high side. End it on a good.
Yeah,
I don't think I've given you a 3 for 3
Doesn't
in
happen
a long time.
Thank you, everyone, for tuning in. We're a day late, but we're back. We're here. We'll be back next week, Wednesday, 10 a.m. Be sure to follow us on all of our socials. And I just want to give a quick thank you, a shout out to our amazing sponsors, Gertin Poirier Avocat Lawyers, Big Insurance in Westboro, CENTUM, and EasyNeonSigns.ca. David, thanks for being here. Great.
Thank you,
Go
Paul.
Jays. Go Jays.
Go Jays. Hopefully we got a World Series champion Jays by the time we record next week.
Yeah, you'll have to have the hat back on.
Oh, yeah, buddy. Oh, yeah.
All right, everybody. We'll see you later. Have a great week.